Top 100 Financial Advisor, two-time author, one-time bestseller, and I want to help you to avoid losing a lot of money in some very terrible stocks. So one of them we're going to talk about today. As we do this, though, I am going to share this as you should be doing right now. Make sure my volume is down so we don't get the reverb and the crazy things that we've seen on Instagram Live with these IG battles and stuff. So go ahead, hit that share button. We want to get as many people in here as possible as we start to break down the market. For those who are new, for those who may be watching it on a replay or elsewhere, we do this Monday through Friday here on Facebook with a live session around 9 Eastern, 9 Central, Monday through Friday. You also want to click the link above. That is a session that you see here in the background, Building Your Wealth from the Bottom Up. I'm going to get to that in just a second. As soon as this pops up on my phone, so I can share and I can do what I am asking you guys to do. So as we do that, again, I'm teaching a session. This is next Wednesday. That is May 6th. I've been misquoting the date. I apologize for that, but it is correct on the site. May 6th. That's a Wednesday. Me and Tremaine from Mind Over Money are going to help you to build your wealth from the bottom up. My session, as you can see here, is about building generational wealth in the Black family. There are some very easy and simple tools that you can use to start to build your wealth and be able to build it to a point where you can pass it on and do something with it. This is what we need in our community, especially today because times are tough. How do you make sure that you're protecting your wealth if things don't go the way you want them to or need them to? But then how do you continuously grow when things get better, that you have something to build on? What you don't want to do, which I've seen and what I don't want to do myself, is to have worked so long, to have invested for so long, you build your credit score, you do all the right things, but then you don't leave anything behind, or you do all that and the next generation just has no idea what to do with it and how to protect it and how to keep what you have done on the up and up. So how do we do that? How do we make sure that we're on the right track? How do we make sure we're not wasting this particular opportunity? Because there are amazing opportunities in the market now. You want to make sure that you are capitalizing on it and making sure that you're doing the best things possible. So you can see here, tickets, early bird tickets are 25. They do go up to 35 once those are out. There are a few left. I'm not sure how many, but I think once you register, it tells you how many early bird tickets are left. If you cannot make it, you can join. If you register, you will get a replay. All right, now that's out the way, and now that my phone is acting correctly, I will go ahead and pull up the whiteboard here. If you have any questions throughout this, you guys know the drill. I sit around and answer questions rather, so feel free to ask those in the chat, and I'll get to them as we go along. Now, this week, we've been talking about it all week. This is earnings week. This is just so happens to be the week where a whole lot of companies tell us how well or how badly they've been doing. I think it was today. Today is Thursday. I've lost track of time, clearly. So today we've got some news from Amazon and Apple. They were a little mixed. So the market, if I remember correctly, was up today. Amazon said that their revenue was up about 26 or so percent, but they do expect some dips in some other areas. So a little mixed. Good news on the revenue side. Excuse me, not so great on the other side of things. And then Apple put out some guidance as well. So these are things you want to be aware of. Again, I'm not a big fan of jumping into the stock market during earnings week because things can vary wildly. I assumed, which is why I sit out this week just to see what's going on. I assumed that Amazon would do extremely well and it was going to do I was going to do a double-digit jump or something like that. That was not the case. I'm not sure if that stock was up. We can actually check here in a few seconds. But again, it just wasn't what most people expected, or not what I would expect. Depends on who you ask. People expect different things. So those are the two stocks that were of note. We also know that yesterday, Gilead Sciences, they are clearly a science company. They were working on a cure. They put out some very good news between them and the FDA about working on a cure that pushed the stock market up yesterday. We can check that stock here as well as soon as this starts to work, and we'll check that as well. So let me see if this is. It's not loading for me. So this is live. This happens. It's not letting me load. So feel free to continue asking questions. Perhaps I will find a way to answer any of those. But before we get into all of that, I want to get to the main topic of today. So make sure you hit the share so we can really dig into this. So there's a big problem with people that are jumping into the market right now. And that comes with this particular stock. So I want to ask you guys a question. Would you, just going to let me, there we go. Would you invest in a company that has been down negative 81% over the last 3 years? Yes or no? Very simple question for most people to answer. Would you invest in a stock that's been down 81%? Oh, not this year. This year is a bad year for some companies, right? But just this year, would you invest in any company that was down 81%? Most people would say absolutely no. Would you, over the past 7 years, and this is as far back as the data went, otherwise I would have done an even 10, would you invest in a company that was down 66% in the past 7 years? That answer would also be no. And the problem, or the stock actually is, erase this down here, AMC Theaters. You guys know I can't spell or write, so hopefully that works. So AMC Theaters has not been a good stock despite seeing record levels of people go to the movie theater. This is again a very good example of one, understanding the business and understanding the stock before you jump into it. Because when you don't, you can jump into things that are very cheap. I think AMC Theaters is about $5 a share right now. But again, 81% lost. So you would have put in 1,000, you would have had like less than $200 left over after 3 years, not just after one, after 3 years, consistent losses. Meanwhile, a bunch of boring stocks, Coca-Cola, which hasn't been amazing, but it would have made you money. We talked about Pepsi. We talked about the Walmarts, the Costco's. All of those would have made you money over that time period. AMC is popular. It's one of the largest American theaters that we have. And when you think about all the movies that have come through over the past 3 years, you're talking Avengers was $1 billion movie. You had Joker last year. You've had all the Marvels and Star Wars movies over the past 3 years, but the stock has consistently been down. Now, here's the thing, again, for new investors, the first thing you want to do is, even when it comes to generational wealth, is you want to understand what it is you're investing in. Because what you don't want to do is to lose money, lose your own money. You don't want to do that, but you definitely don't want to lose the money of people who are coming behind you. So if you are expecting a child and you know that you want to invest for them, that's great, right? But what you don't want to do is say, hey, I'm going to go buy this stock, and then by the time they're 3 years old, you've lost 81% of their money. That's not good. But these are the things you have to ask yourself: is how do I understand how well the stock has done? This is what we've done right here. And B, do I understand the business and how well the company is doing? And do I understand what could be on the horizon? So no one can predict the future, right? But here's what we do know about AMC and what we do know about Pepsi, which we had talked about earlier this week. When it comes to AMC, as you can see here, they are having a beef. This is the best way I can describe it, between them and Universal. And to summarize this beef, Universal Studios, they put out a bunch of movies, right? One of them was the Trolls Worldwide kids movie. I don't know how good the movie was, but the movie did make about $100 million because AMC theaters were closed, and they paid people, I think it was like $20 to stream it directly to consumers. So they said, forget this theater altogether. We're not even going to talk to AMC. It's the coronavirus. You guys are closed. I'm going direct to the consumer. That's what they did. They made $100 million. On the previous Troll movie, they made about $114 million. So they only made $14 million less by cutting out the theaters altogether, which is great for Universal. That is not great for AMC. So because they put that out, AMC says, look, we're not airing or putting on no Universal movies at all, period, until y'all figure this out. So they're just essentially, AMC as well as I think Regal are just banning Universal Studios altogether. So if it's a Universal movie, you're unlikely to see it in a theater, at least for quite some time. They have until September, which is the next big release, to get that fixed. Now, the movie business works similar to this. So basically, a movie comes out, it has to be in theaters for 3 months. then it can go to DVD or whatever other platform, streaming, so on and so forth. So the AMC's, the Regals, they get first dibs on airing that movie and collect whatever revenue they collect. Well, times have changed now. And the issue with AMC is, will we have to go to the theater again? I don't know. But if you're not asking yourself this question before you jump into the stock, you could end up losing 80 or 80, anywhere between 60 to 80% of your money by doing that. And this is again because it's a cheap stock. A lot of beginners say, oh my God, I saw this in the news. I'm going to get it because I know AMC is going to return. We don't actually know that, especially with this news out there. This is the part of the research that you have to do before you jump into the stock market, before you invest for yourself, or invest for someone else. And this is very easy, simple, Googleable things. Things that, again, I go to CNBC, I use Yahoo Finance. These things just pop up on my phone. I'm like, look at that, very interesting. Let's talk about it. So these are the things that you want to be very, very careful. Just because it's cheap doesn't make it great. Just because you've been to AMC, this is when I go to the movies, which is rare, which is just big action movies, the only time I actually go, I'm going to AMC or a Cinebistro, but depending on how much money I have. But AMC is like my go-to spot, but they may not be around. This could be the next blockbuster because we saw Netflix coming around the corner where I could get DVDs and whatever movies shipped to me directly, and now streaming that I didn't need to go physically into a blockbuster. This could be the next thing where I don't have to actually go to a theater anymore. And we don't know when things will open up correctly, the way that they're supposed to, or the way that the normality of it. So these are the things that you want to be concerned about. And these are the things that you want to know about before you jump into any single investment. What is going on in that space? How is that space healthy? Because if you had asked me before actually looking into it, I would have assumed the movie business is fine. Clearly, it hasn't been over the last 7 years, at least for AMC. These are the questions you have to ask. And there's a difference between, like we said, there's a difference between Pepsi and Coke because their business is different. There's a difference between Disney, who makes a lot of these movies, and AMC. Two completely different things. Disney has Disney Plus. Disney has live sporting events. Disney has what does Disney have? Disney has Disney World itself. They have a different business model where if they're not making movies or they can't, or AMC is closed, Disney gonna be all right. Everybody's watching the Jordan documentary on ESPN that streams directly to your phone or whatever. AMC does not have that option. So you always have to do just a little bit of research. You don't have to be an expert. You don't have to be the world's greatest investor to do these types of things. It's simple as going to Yahoo Finance and say, hey, give me what happened over the last 5 years. It's as simple as going to CNBC and typing in the stock just to see what the recent news is. But these are the questions and the processes that you need to ask yourself before jumping into something, because you'll turn around and you get hurt if you're only looking at the stock price. I only got $10. I can buy a whole bunch of shares of AMC, or I like AMC. This is why I tell people all the time, as I'm looking at the comments, it was good, just FYI. Okay, so the movie was good apparently. So again, so people just look into it and say, oh my God, it's cheap, I love it. A lot of people say to get started in the stock market, you should go to places that you like or things that you own. I'm not a fan of that because I like AMC. I like going to see Marvel movies and Star Wars movies or whatever else is interesting. That doesn't actually make me money. And that's the same thing with Uber too. People said you knew Uber was going to work because I use Uber every day. Well, that's fine. It was the worst IPO in the history of IPOs. And maybe that will change at some point in time. Maybe it'll change in the future. We don't know. But right now, it's not the best thing for you. So I wanted to let you guys know that streaming stocks. So yeah, that's so Chance just brought up streaming stocks. So yes, Netflix was on my list and has been on my list since January of this year, and it has done very well. I think it's up like 35% or so. So if I'm looking at this from a macro perspective, I'm saying, well, if AMC is going down, and AMC is, I'm not going to say they're dying off because anything could happen, but if AMC is kind of falling off, then somebody has to be benefiting from that. That happens to be Disney and Netflix at least right now, and then maybe someone else will come into the fold later down the line. If Zoom is doing well and Microsoft is doing well because they have a streaming platform, then somebody else must be falling off for that to happen because people are shifting. We got the same amount of people, right? Generally, that people are shifting from something in the past and moving to something else. And if the business isn't changing, I don't know why AMC didn't release some sort of streaming business. I don't know why they didn't invest in Netflix. Hindsight is 2020. I don't know why I didn't do that, but whatever. These are the things that you have to ask. So if something is going up tremendously, then something is probably falling off. You need to see where you are in that space and why. When we went back and talked about Pepsi, we saw that Pepsi is fine. Pepsi is fine because they still have snacks. They have Frito-Lay and the drinks. Coca-Cola just has the drinks. That's why Coca-Cola is not doing nearly as well as Pepsi is, even though people are at home drinking stuff because they sell a bunch of stuff. So you have to be able to really look at them and ask those serious questions and determine whether or not this is a good investment for you, because it is going to depend. But if you go into it blind, you're going to go and run into an issue like this. That's not where you want to be, and that's not how you create generational wealth. It's very, very, very simple to avoid huge losses like this. A part of it is coming to live streams like this, sharing stuff like this. This helps you and everyone else to be a better investor. Also, signing up for events like the one next Wednesday is another very easy way. And these are the things we're going to discuss when it comes to building generational wealth. Is how do we protect it? How do we, one, avoid things like this? And then what are the other easy things that we can do to make sure that your wealth, the things that you build, let's say you made all the right investing moves for 30 years and you didn't have a will, you didn't have the right beneficiary, and it goes to an ex-husband or an ex-wife. It's happened. That conversation is very, very awkward, and it's something as a financial advisor that you can't actually fix. So you got to do it right. You really only get one chance, because once the kid grows up and they make that mistake, that's it. So how do we avoid those? How do we reduce those? You go to BillBennett.com/wealth. The session is only $25 for early birds. If you're late, I think it goes up to like $35. So you want to make sure you check that out. I'll stick around for any other questions that you may have. Great information. I'm new to this and want to know where to get started. Hooray! I'm glad you asked. So if you want to start, you can easily go to, I'll just show here, go to buildingbread.com. I teach classes every single day. This is what I do all day, every day is these classes. You'll get this pop-up. You can ignore that. And then I have a free class tab here. So you go to free classes, and I have free classes and free resources to help you to start. So how do you choose your own stocks? How does $2,000 make your kid a millionaire? Hello. So you want to make sure that you go to the session, because I'm going to break it down. This is just an email that kind of breaks it down, but you'd rather ask questions. So that's an easy way to do it. And then how to start investing without losing everything. So if you're a beginner and you're trying to figure things out, that is a very quick and easy way to start. Everything I try to talk about rather, is how to get you started. Where do you begin, and how do you avoid making big mistakes? Because when you make a big mistake, you can come back from it, but a lot of times you're afraid. Like, I don't want to do this anymore. I lost a few dollars. I'm really going to stay out from this for forever, which is actually the worst thing that you can do. You have to invest to grow your money. If you don't, things are going to get more expensive, and then you're going to have to work forever. You want to invest to make your job, your income optional, so that my money makes money. I ain't got to go to work. My money's clocking in every day from 9 to 5. I'm chilling at the house. So that's how you want to kind of play things from this point moving forward. All right. So thank you guys for coming out. Thank you for sharing. I will see you tomorrow. We're going to continue this series to talk about what's happening on the earnings calendar and what may happen in the market. I wasn't planning on talking about AMC today, but things happen, and that was in the news. So I wanted to make sure that I brought that up. So again, AMC is down 81% for 3 years. It's down 66% over the last 7. Could it come up? Yeah, but if it went up 50% this year, it's still down. It is still down over the past 3 years. So be very careful before you jump into any stock, especially stocks that are below $5. Told you guys about this about a week ago. You're probably going to see a lot of people like, hey, I'm buying AMC. Okay. you go ahead and do that and see what happens. So again, be very careful. On a serious note, be very careful about this. Make sure, again, go to buildingbread.com/wealth. I want to show you how to build and create generational wealth, even if you are a beginner. So check it out. I'll see you guys on Wednesday, May 6th. You will get a recording if you can't make it to the live session. And I'll see you guys tomorrow.